All right, guys, I'm going to go over the 8-1 on your own problem. This problem's on page 222 of your textbook. Basically, we're going to have to journalize the closing entries to close out the temporary accounts, and then we're going to post them to a general ledger. You're going to use your worksheet tab to work through this and to get the information. So when we do our closing entries, first thing you're going to do is close out sales, then you'll close out all your expenses. Then you will close out the balance that shows in the income summary, move that to capital. And lastly, you're going to close out your drawing account. So to get started, your textbook tells you that this was on page 24 of the general journal. So I'm going to put page 24 in here. And to start this page, you'd want to type closing entries. Okay, so when we look at the worksheet, I know that the first thing I need to close out is sales. So if I look at this, I can say, okay, sales is a credit on the income statement. So in order to get that back to zero, I'm going to have to debit sales for that amount. And the credit would go to income summary. So in my general journal, on mine, because it's not a continuation of another page, if you were doing this on the paper packet, you wouldn't have to put the year and the month in there. Going forward, looks like everybody's going to be doing these on Google Classroom, so you'll want to make sure you do that. So I'm going to put 20XX December, and we'd put the 31st. So I know I'm going to debit sales here, and I don't have a source document, it's just the closing entry. So I'm going to debit that for the $8,280. And then I'm going to credit, make sure you indent income summary for that same amount. After that, I need to make sure that I close out all of my expenses. Now, I'm going to look at the worksheet right here. And I can see that these are all my expenses right here. These are each account. And then this is the total expenses right now. We know that because that's how we did this in the last chapter when we did our financial statements. So I'm sorry, in chapter 6 when you prepared the worksheet. So all of these added up comes to $28.56. So I'm going to have to, I know that these are credits, I'm sorry, these are debits. So to bring these back to zero, I'm going to have to credit them. So in this case, the debit would be income summary for this amount of the total expenses. So in my general journal, I would put the 31st here. I'm going to type income summary. And that debit amount would be the $28.56. And then I'm going to have to put all of those amounts as credits. Now I've got this in front of me, but what you would be doing is going back and forth to the worksheet saying, okay, advertising is 910, type that in there, and then cash shortened over was 2, and on down the line. Okay, so I know, again, these numbers right here add up to this total. So this is clearing out all of our expense accounts. All right, third step, we have to say, okay, do we have a net income? Do we have a net loss? And how is that going to affect capital? So if I look at my worksheet, I can see I have a net income of $5,424. But where this number comes from that you need to understand is it's our sales minus our total expenses. So if I went out over here and said, okay, sales is a credit, and I subtract this out, it's $54.24. The reason this affects income summary, if you have income summary right here, if I say this is the debit side, oops, and this is the credit side. Right now our debit amount for income summary I can see is $28.56. Our credit amount is $82.80. This doesn't have a normal debit or normal credit balance, but because the credit side is larger, if I subtract the difference between these two, you can see that that is actually the net income amount of $54.24 as shown on the worksheet. So right now our income summary has a credit balance. In order to bring the income summary back to zero, which we know we need to do, we're going to have to debit it for that amount. So I'm going to type income summary here. And I'm going to credit Sawyer Parker for that amount, which we know that our capital account has a normal credit balance. So when we credit capital for this amount, that's going to increase our capital. Okay, so last thing you want to close out is our drawing account. If I go back to the worksheet, I scroll up a little bit, you can see that the drawing account is right here, and it has a debit balance. If I scroll all the way up, you can see this is the debit column. So in order to get this to zero, we're going to have to reverse it with a credit of $3,400. So if we credit Sawyer Parker drawing, we're going to have to debit capital, because when the owner took money out of the business for personal use, that decreases the value of the capital. So here I would have Sawyer capital as my debit. Then I would have Sawyer Parker, drawing as my debit. Make sure you don't just like let that autofill. It can't be capital, it's got to be drawing there. So we would credit that. Okay, so that right there goes over just the closing journal entries. And what I'm going to do is, this software I'm using to record some of this stuff, it only lets me go so long. So I'm going to end this video right now, and then when I come back, there'll be a second video for the second half of when we post all of these entries into the general ledger. Okay, so I'm going to go ahead and stop recording here if I can figure out how to do it. All right, I'll be back.